Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is fan favorite Phil Davis. He's the CEO of Phil's Stock World, and we're going to discuss the movement that we've seen in crude oil. Phil, it's great to have you back at MarketSite with me.
Thanks,
and
Jill.
Crude, it's its highest level in 3 years. And if you take away the headlines, remove the geopolitics from it, supply is coming down, demand is moving higher. But do you think that this move is justified where we are right now?
Well, given what you're saying, I mean, if demand is going up, which it isn't, frankly, but we'll talk about that, and supply is going down. Supply is going down, it's forced. It's not going down because there's a lack of supply. It's going down because the Saudis and OPEC in general are cutting the supply off. So the other thing about oil, though, as a factor is when you're looking at futures pricing, it should be based on the scarcity of supply. And if the supply is being, is it like a supply interruption could disrupt the oil. But if you're holding back 2 million barrels a day of production, then there's less danger that there'll be an interruption in supply because it can be made up by OPEC just turning the spigots back on. Right. So that's there's a mispricing right now of the oil futures because it has a fear factor built in that shouldn't be there. Also, very, very misleading though, is the demand in the U.S. is nowhere near what people think it is because we're exporting 3 million barrels a day of refined products, of petroleum products. That's 21 million barrels a week.
Right.
That's one whole day's use in the U.S. So 15% of what they think is U.S. consumption is just our refiners making oil for other countries.
All right, well, let me ask you this question. There's a number of geopolitical concerns, most notably what's happening in Syria, but particularly the Iran deal. That comes up May 12th. Why is that so important? And how do you think this administration is going to handle it?
I think you got dice. You can roll the dice on that.
It's definitely going to go to May 12th, of course, because we have to have the...
You got to have the drama.
Exactly.
Trump loves his drama, even if he knows what's going to happen. He likes to hold it to the last minute and give you the cliffhanger the night before,
Right. It's fun times if you're a crude trader. Yeah,
it's fun. We shorted this morning, actually. People said we were nuts, but we actually picked up a nice run on oil. It dropped nicely this morning. The thing is that the Iran thing, of course, we could, whether we put sanctions on them or not, Iran's going to sell oil to somebody. We can't stop them from selling oil. They'll sell it to Russia. They'll sell it to China. China happy to buy oil. They don't care.
Right.
So if we put sanctions on Iran, it doesn't change the global oil supply. So it's a bad reason for oil to be up. That's why as we get closer and closer to 70, we're more and more interested in shorting it because I think it's going to be a pretty firm ceiling for now.
All right. And how about the situation in Venezuela and why has production declined so significantly?
Well, okay, I think it went down from about 2.5 million barrels a day to maybe 1.8.
Right.
So, yeah, I mean, that's a significant decline, obviously. It's
part of it, the refiners, they weren't investing any money back into the infrastructure.
Well, they can't.
Right.
Because they collect their money in bolivars or whatever they're called down in Venezuela, and by the time they collect the money, if it takes a day, it's devalued by about 30% from where they charged it. They can't turn around and buy equipment. They just turn their profit into a loss.
Right.
That's their problem. The staggering inflation rate in Venezuela is causing disruptions in business that basically it makes it impossible to make a long-term plan. You can't say I'm going to have this much money in this amount of time.
All right. Now what about the OPEC meeting coming up in June?
Well, that's what this big push of oil is into. They are trying like nuts to get the price of oil up and keep it over 70 because, first of all, they want to show that their thing is working. That's very important to them to make sure that the oil partners think it's working. They want to get Russia on board because Russia, of course, wants oil over 70 too. And then they've got their Aramco IPO, which is based on the price of oil. So the Saudis are pulling out all the stops right now to get oil as high as they possibly can to spark an interest in the IPO for their state-run oil company. All
right, and to wrap it up, and you've touched on it before, how you were shorting into the 70s this morning, but how are all these outliers going to impact the price of crude? Recall too that we're also coming to the summer driving demand season here. I'm not sure if that's going to have as much of an impact, but what's the range? Where do you think we should appropriately be with crude based on all of these outliers?
Based on all these outliers, I think in July, 70 is probably the top. I think that we're already pre-pricing in, the bulls are pricing in everything going perfectly and so on and so forth. And there's an incredible push to get the prices up. And you hear it every day. They're upping their prices. They're upping their targets. This morning, Bloomberg printed an article saying something about the Saudis would like to get 80 to 100 now for oil because they got to 70, so now they want 80 to 100. Of course they do. But that's look at the people on the street here cannot afford $100 oil. It's going to crash the economy. Crashing the global economy, not good for oil.
Right.
So that, you know, there's a feedback loop. It's a slow feedback loop, but I really think 70 is going to be unsustainable, and I think we're going to have a dip right now back to the 65, maybe below 65. You'll get up to 70 in July, but after July, I would short the hell out of oil back down to the 50s, because that's really all it's worth.
All right. Thank you very much for joining us at MarketSite as always, and traders, thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.